had to make a video because we've had a change of the naming of the tab, so it's quite an important change. And so obviously, if you were coming back to QDB and you wonder where things are, or if you're new to QDB, it's still useful. But this is really just a video for the existing subscribers and the old subscribers. So just to say, we've had two tabs that have been renamed. It's also a video for new potential people who want to join, because it should be quite informative. And so this used to be called the dashboard, and this used to be called the search tool, and this is now our dashboard. And we can all alter this and look at things, all these currency pairs, which is pretty cool. And look how long they are on Aussie CAD. But that's just a quick one on the dashboard. That got renamed from the search tool. It's now called dashboard. This has been now called the risk calculation, and it used to be called the dashboard. So we won't ever refer to this as the dashboard ever again, because we've got this, right? And that's obviously, it looks more of a dashboard, doesn't it? It looks quite nice. Risk calculation is basically telling us how the herd are positioned on their indices. So if the SSI, which is Speculative Sentiment Index, you can do a Google for SSI, and it tells us if for every one person who are buying indices, there's 11 people trying to short indices. Now, we were minus 20, so that tells us that there were so many bears, and because we've come off of minus 20, we're now minus 11. It tells us that a lot of bears got squished and they got liquidized, and because price carried on higher and higher, and we grinded higher and higher and higher, and unfortunately for the bears, they got demolished and they had to leave the casino. And now we're left with 11 people trying to short. We were 20 people trying to short, and now we've got 11 people. So those poor old bears who were shorting all the way this year, they got destroyed. And it's probably going to come up to carry on to punish them, because there's 11 people trying to short. So we have come off extremes, worth noting. And the risk calculation, in case you're wondering, is taken into account all of these metrics. So it looks at the Dow Jones, the S&P, the Nasdaq, Russell, VIX. You'll note that the VIX has got a stronger weighting, because that's the fear gauge, and that's why it's got a little bit of a stronger weighting. We have it so it weighs the same as the S&P, because the S&P is the largest index in the world. So the VIX is weighed the same as the S&P. And you note that the France and UK aren't weighed the same because of the volumes of traffic in those indices compared to the S&P, for example. And we've got individual companies as well. So we've got some tech there. So in case you're wondering why, because sometimes when we have a risk off in tech, it can lead to a little bit of risk off on a broader term. And we've got the dollar index as well. Now, in case you don't know, the dollar should do okay if we're risk off. So risk off is when stocks are falling, and risk on is when the indices or stocks are rallying. Now, the dollar is like a safe haven, so we did appreciate on Friday, because things had fallen quite a bit. The Nasdaq was down 93 points, so had you caught that, you would have done quite well. The Dow Jones, interestingly enough, was being quite unique. It had rallied, but don't forget, this is weighed out of the industrials, and this is like a bigger picture of the American economy, really. So you can trade the Dow Jones, but it's only 30 companies, but the S&P is 500, so it's a better index to give us an idea about risk on, risk off. So that's why it's weighted more than the Dow Jones. But interestingly, we had a good day on the Dow Jones. So what I'll do every day is I'll populate this manually, and then I'll reset this every morning as well. So we ended up being at 37 out of 100, 100 being maximum risk on, bullish, and 0 is minimum risk off, bearish. Okay, so we end up 37 out of 100, so fairly bearish. My idea here is that if we're above 50, we look to buy. If we're below 50, we look to sell indices, technically. Okay, sentimentally, we should be coming up because of this, because the herd are quite short, but we have come off extremes. So Just a quick one on the risk calculation. Remember, this used to be called the dashboard, and hence why I'm making a video. That's the bubbles. So they're quite long on the New Zealand dollar, they're long on the yen, they're long on gold, and they're long Aussie. Now these two being quite long and therefore sell, it's fairly risk off because these should be falling, and these are risky currencies, AUD and NZD. However, yen is like an anomaly, and it's been quite strange, and it's basically just it's moving because of the sentiment, I believe. So really, yen shouldn't be with those two. That should be like a traditional safe haven. The Aussie and the Kiwi should be risky. They are risky currencies, but the yen shouldn't be there, and that's the reason for where it's basically punishing the herd, because we need to eliminate them out of the casino, and they're holding on, basically a bit like crypto, where they're just hodling. And so yen is being quite strange. So currently, I am not trading yen at all until we come off, just to reset that sentiment as well. We need that to shift because the herd are holding on to their bets. They're really bearish on cross yen, so that should be falling. So unfortunately, we're going to probably continue to see cross yen ramp higher because of this. Okay, and there's Monday, so we can see development over time. So let's look at DAX, for example. So that difference was quite significant, and being red is a sell, less red, and then we went sort of quite significantly less red, and then we did very, very softly red, and then DAX just went slightly green. So it looked like a bit of a trap potentially that has been forming on the DAX potentially. So we might be coming up. You can see how you can potentially use that, and we can see the shifting over time, which is quite useful. Pound was a buy on Wednesday, and then they'd actually gone quite long on their sentiment, so they were quite short, -261, and then they went long 1.15. Now look at the price on Wednesday to Thursday, and you'll probably find that we did dip on the sentiment, on price, so I say. Yeah, we did dip a bit, didn't we? This is where they went long, and so they went really long, so price fell. Anyway, so that's how you can use it. So you just look at your, those cells develop over time, and what we could do potentially, we could have some graphic down there to tell us the movement across time, which might be a good idea. I might do that today, and that'd be quite useful, and we can see the sentiment, evolve. And that's it. So there's the copyright and stuff, and just lots of stuff on the sheet. But so this is a quick one on the risk calculation and how to use it as well. So what I might do now, I might do some kind of cool graphic down here, and we can see things, visually over time since Monday, can't we? And that's it. So remember to trade safely. Any questions, let me know. There's the patreon.com/QDB, and you can join us at a 7-day free trial. And I welcome any questions that you've got. So this video now will go into the guide area, and obviously, of course, it will have to get renamed because this used to be called the dashboard. It's now called the risk calculator.